Good day. Welcome to this video about financial statements analysis, specifically horizontal and vertical analysis. At the end of this video, you will know the essence of financial statements analysis, the concept of horizontal analysis, and lastly, the concept of vertical analysis. So let's proceed to our lesson about understanding the essence or purpose of financial statements analysis. So the objective of accounting is to provide information that will be helpful to the firm in terms of decision making. Financial statements are used to evaluate and analyze the performance of the company on a specific period. It provides information about the entity's financial position, financial performance, and cash flows. This will help the firm to confirm past expectations, evaluate present financial results, and lastly, to plan for future outcomes. Financial statements analysis can be analyzed through two methods, which are the common size analysis and ratio analysis. But in this video, we will only cover the common size analysis. The first method that we will discuss right now is the horizontal analysis, and it is calculated horizontally. That's why it is called horizontal analysis. Horizontal analysis is the method of comparing and analyzing financial results of different accounting periods in each financial statement account and element. It calculates the change in an account balance and expresses that change in both peso and percentage terms. So this figure is an example of financial position that's analyzed through horizontal analysis. Horizontal analysis is done through computing the change in amount by subtracting the current year to the prior year. And second, to compute for the percentage, you will divide that amount change over the prior year. So let's have an example. Take a look at the line item of the total current assets. So the prior year on that line is the 2019 with the amount of 42,000 pesos, and the current year is year 2020 with the amount of 45,000 pesos. So you will solve for the change in amount by subtracting the amount in 2020 with the amount in 2019. So 45,000 pesos minus 42,000 pesos will result to a 3,000 pesos change from year 2019 to year 2020. And to calculate for the percentage change, you will just simply divide the change in amount, which is 3,000 pesos, to the base year. So what is the base year here? The base year is the previous year, or what we know as the previous year or the prior year I mentioned earlier. So it is year 2019. So you will divide that 3,000 pesos to 42,000 pesos and multiply it by 100 to get the 7.14%. So let's have another example to clear things. Look at the line item of the total assets. The current year amount is 333,000 pesos minus 284,000 pesos of the prior year will equal to change in amount of 49,000 pesos. Then to get the percentage change, divide that 49,000 pesos to 284,000 pesos of the prior year or the base year, and it will result to a 17.25% change. So to interpret this, let us say that the entity's total assets increased by 49,000 pesos, or in percentage, let us say that the entity's total assets increased by 17.25%. We can also analyze our income statement using horizontal analysis. So, same process will be done. The amount of the current year minus the amount of the prior year. Then to get the percentage, you will divide the change in amount by the prior year to get the percentage change. So take a look at the line item of net income. You will subtract year 2020 with the amount of 123,000 to the prior year of 88,000, and you will get a change in amount of 35,000 pesos. And to get the percentage, again, you will divide 35,000 to 88,000, multiply by 100 to get the 39.80%. So it means the entity's net income increased by 35,000 pesos from year 2019 to year 2020. And in percentage, the entity's net income increased by 39.80%. And that's how we solve and interpret our balance sheet and income statement using our horizontal analysis.
So let us now proceed to vertical analysis, or also called common size financial statements. It is a percentage analysis used to show the relationship of each component to the base total within a single statement. Its peso amounts are translated to percentages, indicating the relative sizes of an item in proportion to the whole. The purpose or importance of vertical analysis is to compare two different firms with two different sizes. So instead of amounts to be the basis of comparison, we make it the percentage. We turn every line item into a percentage. Again, vertical analysis is an ideal for comparing firms with different sizes. It can only be used on the balance sheet and income statement. But unlike horizontal analysis, you can only need to look out 1 year to calculate the vertical analysis, and that is only one column this time. It allows you to see the percentage of the category in reference to the other base categories. So for an example, in the income statement, the denominator is the net sales. Each item in the income statement is converted into percentage by dividing it by net sales. While in balance sheet, each item is converted into percentage by dividing it by total asset amount or the total liabilities plus owner's equity amount. So to understand it further, here is an example. Let us say Saitama Graphics Incorporated has requested that you perform a vertical analysis of its balance sheet. Here we are given the data of its balance sheet. Here is a spreadsheet of the same data. And again, we are gonna go down through this is the balance sheet, so we're going to do a vertical analysis of the balance sheet. Remember that each line item is going to be expressed as percent of total assets or total liabilities and owner's equity. Note that these are the same numbers and is interchangeable. They tell us that the total current asset is 42,000. To see the percentage, you divide the total current asset, which is 42,000, by total asset, which is 284,000. And we find that the total current asset is 14.8% of total assets. And we would do that to property, plant, and equipment net. So, property, plant, and equipment net is 207,000 divided by 284,000 total asset, which we find the property, plant, and equipment net is 72.9% of the total assets. And in other assets, 35,000 divided by 284,000, we find 12.3%. And those percentages that you calculated should add up to 100%. And we are going to do the same way to liabilities and owner's equity. So we're going to proceed to another example. This time is for income statement. So here is the data. Senki Enterprise has requested that you perform a vertical analysis of its income statement. Remember that in income statement, the base number or the denominator is the net sales. So we use the net sales as our 100%. From there, we can take any item divided by net sales to determine its percentage in relation to net sales. One of the most useful items to do this for is the cost of goods sold. So for this example, you divide 125,000 by 250,000, which would equal to negative 50%. For the side note, The effect of cost of goods sold is decrease of sales. That is the reason why it's negative, and all other expenses are negative. Knowing the percentage of cost of goods sold help you determine whether the company is making a profit off the product that it is selling before any expenses are taken into consideration. Finally, using vertical analysis can also be beneficial to compare other companies' income statements to your own and see if you're doing better or worse than your competition. We hope you now know how to calculate both horizontal and vertical analysis. Thank you and see you next time.